The earnings season kicks off today with TCS set to report their numbers in the evening. A CNBC-TV18 poll projects a 1.2% constant currency revenue growth in the third quarter. Margins also expected to expand. The stock currently trading with gains along with the entire IT pack.
Titan trades lower despite a strong third quarter business update. The jewelry business grows 11% on a high base of 37% growth. The company also added 111 new stores in the quarter gone by.
Kalyan Jewellers, on the other hand, reports similar growth rates, and the stock is buzzing, perhaps on account of valuation support. The revenues for them grew up approximately 13%, along with a promised expansion in gross margins.
Tata Steel's India business sees 11% growth in the domestic recoveries. Europe remains weak, but it saw a 5% sequential growth. The stock trades high with a gain of around 2%.
Paytm's value of loans disbursed grows 36% sequentially. Monthly transaction users also up by about 6%. On the other hand, Bandhan Bank's Q3 update reflects a 14% year-on-year growth in advances, although cost of liabilities rises.
Hello and welcome to Chartbusters. Well, the markets have holding well in the green, and this is the benefit of having a net short positioning. Suddenly out of the blue, you got some good news. And as we said earlier today as well, don't chase the opening if it is a 130, 140 point gap up. The good news was the opening was around 80, 90 points out, and from there you saw a bit of a downtick, which got bought into, and now in fact we're scaled to the high point of the day. The IT index is doing well. We could expect some volatility since TCS comes out with its set of numbers. But I think the Nifty bank, that's still underperforming. It's up 0.8%. And if that could move higher, then in fact we get past that 18,100, 18,150 odd mark. But Mangalam, a good start to trade.
It is a good start to trade. We were pinning our hopes on the Nifty Bank to lead the recovery this time around. The Nifty Bank, of course, while it's moved to the high point of trade, the joker in the pack today turned out to be the IT sector, which has supported the index. So if that happens and that continues to do well, we can see sustained up move. Like Nigel said, that there have been 59% short positions by the FIIs itself. Importantly, the mid-cap index is also gaining in line with the frontline index, and we have Reliance, which is supporting the cause of the bulls as well. So along with Reliance and the IT index, the Nifty closer to that 18,100 mark. But let's talk about the stock on our radar. Equitas Small Finance Bank, their third quarter update has reflected a strong sequential growth in advances, while deposits too have grown strongly. However, in other news, the RBI has also given its approval for SBIMF to pick up 9.99% stake in the merged entity. To discuss this and more, we now have Mr. P. N. Vasudevan, who is the MD and CEO of the company. Thanks a lot, Mr. Vasudevan, for joining in once again. The last time we spoke, it was with regards to your decision of coming back to the company. You had said that, the second half of this year, growth will continue at 25%, and that seems to be the case in the first half of the second half of this year, which is the third quarter. What do you think the fourth quarter is likely to be? Do you believe that 25% is the run rate, or maybe you can scale it back to the 30% from which you scaled it down to 25% earlier?
Good morning. Happy New Year to all of you. Pre-corona, Equitas, we have generally been having a growth rate of around 30%. So we always expect that on a sustainable basis, we should be aiming around that 30% level. This is largely on two factors. One is that our size of the advances actually is very, very small. We are a very small bank compared to everybody else in the market. And so a percentage of 30% on that base is not something which is very dramatic. Second thing is the segment that we lend to, there's a lot of unmet demand because that's traditionally not been the banking sector's focus. And so there's a lot of pent-up unmet demand in that segment. So a combination of this, we believe, is something where Equitas should be able to look at around the 30% level, give or take a few basis points here and there on a sustainable basis. So we had predicted a 30% growth for the current year also, coming off from the corona years. The first two quarters was a little low because some little bit of execution in the non-Tamil Nadu states was taking a little longer time. So we pared it down to 25, but in December we did achieve a 27% growth. And for the full year, we should be in the range of around 25 to 30. So give or take a few basis points, it should be around that.
Okay, all right, Mr. Vasudevan. So good to see the sectors that you're lending to, they're showing traction, and as well as on a low base, you expect to grow by 25 to 30%. Let's get a couple of aspects then out of the way. The credit deposit ratio, that's moved to around 106% odd. Don't you think it's time now to start focusing more on the liability size? Where do you see this basically stabilizing? The CD ratio, that's point number one, and also your CASA, that's come down to around 46% odd. It's come down on a sequential as well as on a year-on-year basis. Outlook on that, where is that number likely to stabilize?
Yeah, so the credit deposit ratio, see, we do get options from time to time of taking refinance from some of the financial institutions, and they come at a fairly attractive interest rate, given the fact that, we are either in affordable housing segment or we are in the very small business loan lending segment. So there's a lot of support that we get from the financial institutions by way of refinance at rates which are fairly attractive. And so we do a combination of deposit as well as refinance from some of those institutions. And that is why the CD ratio is around that 100% level. Going forward, we should expect that to be around that 95 to 100% level. Because we would continue to continue to aim at getting the benefit of lower refinance rates, given the kind of assets that we are actually building on the books.
By when does this come down, sir, to this 95 to 100% before you tackle the CASA part of it?
It also depends what will be the refinance norms of these lending institutions. So long as they continue to give us attractive rates for the kind of borrower that we are lending to, I don't see that actually coming down too fast, because we would like to get the benefit of lower refinance rates. So I don't want to put a time frame, but definitely we will continue to mobilize deposits fairly well. And our deposit has been growing very strongly. So that's never an issue for us. We are only using the refinance from a cost perspective.
Right. You spoke about the cost perspective itself. I'm looking at your third quarter cost of funds. They've actually increased 16 basis points to 6.41%. What happens to your NIMs, your spreads going forward? Can you give us a sense? And while you're at it, also about credit cost. I mean, this 75 crore per quarter sort of run rate maintains, or do you see that improving or maybe exacerbating?
Okay. So on the NIMs part of it, cost of funds, yes, there was a 16 bips rise in the third quarter. Actually, we should look at some more increase in the cost of funds in the fourth quarter and probably the first quarter of next financial year, because the old deposits at lower rates are getting replaced by new deposits at a higher rate. So that takes some time to get played out, and that's starting to play out now. Parallelly, the bank has also been looking at our both operating leverages as well as some level of lending rate increase to the borrowers. So on a combination basis, we have been able to maintain the spreads, not necessarily the NIM. NIM is a reflection also of the change in mix of our lending from low ticket to medium ticket size loans. So that's a little bit of reduction in rates that we do when the ticket size goes up. So NIM is not necessarily the principal thing to look at from an Equitas perspective. It should be more our net spreads. And net spreads, we are confident that we should be able to maintain by a combination of better operating leverage, as well as partly passing on the interest cost to the borrowers. So that's on the spread part of it. As far as the credit cost part of it is concerned, pre-corona, our traditional annual credit cost used to be around the 1.1 to 1.2% level. During corona, of course, it had gone substantially higher. This year being the first year post-corona, we had guided for a 1.5% credit cost, which we should aim, which we are quite in line with that, and we should ensure that this year we do land at around that 1.5% level. And going forward into the future next few years, we should really expect our credit cost to go back to our pre-corona levels.
Yeah, what about Mr. Vasudevan? We have that merger that's in the works, and you have indicated everything is on track as well. Give us a timeline. By when should this get done?
So we had kind of expected that before the financial year, that's before March, we should be able to complete the merger, is what we had been guiding all along.
Yes.
And I think we are fairly on track, because we had the final NCLT hearing on 21st of December last year, and all the approvals are in place. So we are awaiting the final orders from NCLT. So it is possible that, keeping our fingers crossed, we might even get it sometime during this month.
Okay, all right, Mr. Vasudevan. Also, you told us that spreads are more important than NIMs from from your perspective. Give us a number out there. What's the broad range we should work with?
See, ultimately, we have to look at our ROAs, and finally, the ROA reflects everything. Whether it's operating cost, credit cost, or interest cost, everything gets reflected in ROA. And our ROA, ideally, we would always love to aim at around the 2% level. And second quarter, we were at 1.6% ROA. First quarter was 1.4. Second quarter was 1.6. And third quarter, as our credit cost comes down, and fourth quarter, as our credit cost continues to come down, we should aim to get close to our target of 2% ROA.
All right, and finally, before we let you go, a lot of approvals coming, funds, ways to increase their holdings, or rather hold up to 9.99% stake in the merged entity. That, of course, it was a regulatory requirement as well. But now that the ceiling for all of them have increased, have you heard from them looking to increase their stake in the merged entity? There is continuity at the top as well with you coming back. Any fundraising plans on the cards?
So there is no primary fundraise plan for the bank because we are fairly well capitalized, around 23-24% capital adequacy level. So there's primary capital raise plan at the bank today. In terms of the some of the investors seeking RBI approval, yes, that's nice for us to know that some of our old investors who have been backing Equitas Group for quite some time now are continuing to exhibit strong confidence in terms of backing up the merged entity going forward. So we hope that we will continue to be able to deliver value to all our stakeholders, that we should be able to retain the trust that they have been exhibiting on the bank. Okay,
all right. Well, it's good speaking to you, Mr. Vasudevan. So you're looking at continuing to grow at around 25 to 30%. The CD ratio over a span of time will come down to around 95 to 100%, but that could not be in a jiffy. And also the ROA target is headed towards that 2% odd mark. It's been good speaking to you. Thanks so much for joining in.
Thank you.
On that note, though, let's turn our attention. My colleague Sapna, she's in conversation with the Divestment Secretary, Tuhin Kanta Pandey. Let's cut across to that.
So thank you so much for joining with us, and congratulations. The first set of bids have been received in terms of the preliminary interest in IDBI Bank stake sale. So give us a sense of what has been the response. We know at times it's difficult for the government to actually divulge details, but give us a sense. Like when you say multiple, what does that really mean?
Well, I think the transaction advisor, he has advised that there's been good response. So we don't, as per our process, we don't reveal the names and the number for maintaining integrity of our bidding process. So I would not be in a position to tell you the number on the names, but suffices to say there's a good response.
Good response, multiple bids. So, at least at our end, we can safely assume that at least 3 and more bids have come in. And again, in terms of the potential sectors which are represented, mainly banks, non-banks, or is it a healthy mix?
Well, it's a healthy mix, both domestic and foreign.
Excellent, sir. Excellent. So what is the next in terms of the process now going forward? Would you be inviting the financial bids pretty soon, or it will have its own timeline?
After the initial bids come in, there is a question of checking the bids and the papers, which the transaction advisor does. Also, there is a fit and proper in this case involved right in the beginning with the RBI.
You've done that at the UAS stage as well?
Yeah, this is a stage at which it will be done by the RBI.
Now that the bids have come in?
Once the bids are coming in. And accordingly, I think they will be submitting papers to, the qualified ones will be submitting papers to the RBI. We have a virtual data room, then it will be opened under the non-disclosure undertaking, where there will be sufficient non-material which is not in public domain. In respect of that, there will be greater amount of information that will be made available to the bidders. and also subsequently the draft share purchase agreement and other definitive documents, the drafts of that will be shared for their response. So this is what is called a due diligence process. Once this is completed, then the RFP is issued for the invite of the financial.
Correct. So how long do you expect this due diligence to last? How many months? And when do you actually plan to call the financial bids? Will it be after the due diligence process or maybe by March?
Well, the timing actually does depend on transaction to transaction. It depends upon the complexity of the transaction, the nature of this, whether the site visits are to be planned, whether, what kind of assets a transaction in that particular company has. So it depends. And this is a bank. I think it's more like in the nature of financial information and accounting information, not in terms of as much on the physical aspects. But nevertheless, I think 3 to 4 months is the minimum time which is required for due diligence process.
Okay. So you will be inviting the financial bids only post that?
That's right.
Okay. And you will be well into the new financial year by then. So a tentative timeline would be sometime closing the transaction, maybe by next Jan, sir? Or even before that?
I think that will be much earlier than that, but it will be in FY24, but it will be, I think, much earlier than that.
Okay, so maybe before the current calendar year closes.
Let us hope, and we'll keep you informed how it goes.
Right, right. So you mentioned foreign, domestic both. So do you think, in hindsight, the fact that you gave 3 very clear categories: banks, NBFCs, PE firms, all of them can come in, and a lot of work was done between you and RBI and the other regulators. So you think that is now kind of paying dividends and will pay dividends in the months to come?
I think that right from beginning our effort has been, since this is the first transaction of its kind, to give sufficient clarity and also make it as larger, as open a process to have competitive bidding. See, key to our process, I've been always stressing, is the availability of competitive bids, the size of the transaction, where most people will be find comfortable. So we don't design our process for 1 or 2 players, but for a larger number of players. So there's a greater amount of bidding, and then there is obviously, we would like the maximum amount of maximization of our value of shares. This is these shares in the government, for example, belong to the government of India. And of course, LIC shares, LIC has its own shareholders and policy holders and so on. So it's very important for us that we do the process in a competitive manner and we discover the best value.
So that's what is now going to unfold. I mean, the process is going to be, the bidding is going to be competitive. We can expect that.
Yes, please.
Okay. Sir, in the past, sometimes, check me if I'm wrong, there were certain discussions way back, 5-6 years back, and there was some indication that maybe around, 80 to 85 would have been a good bid. And we really don't know what happened post that. So what I'm just trying to ask probably is that whatever was there in the past, will that also be a factor for the government to decide, the pricing of the bids as and how the process unfolds? Or you think that this is a fresh, clean slate and, whatever comes forward and whatever the reserve price the government decides at a later point in time, that is how it's going to be. The past is not going to cast a shadow.
So this is a price discovery process. So we are out in the market to discover the price rather than the other way around. We don't determine the price and do it. The benchmarking price or the reserve price is only an internal process for us to satisfy ourselves that, we are not really, in a way selling it, very below par. But what exactly is the price is for the market to discover. And a competitive bidding process ensures that. Besides, any company, what it is, what is its value, keeps on changing, as you know, in a dynamic economy very fast. It depends upon, it not necessarily only depends upon the past, but it's a lot to do with future. Its present context and its future setting. So it's a very complex process, as you know, And that's the reason why people, different bidders would value it differently. Even though, technically speaking, we have the same quantitative processes in investment banking. But the fact that, the people attach different value to different price, because essentially the valuation or price at the end of the day is also a subjective thing based on assumptions about the future.
Okay, so one or two concerns over here. Some experts, or rather in some quarters, there is this impression that the legacy NPAs of IDBI Bank could still be a concern. Aging of NPAs, of course, the provisioning norms come down, but that could still be an overhang. What is the government's take on this? Could this be a stumbling block in the times to come? Maybe not, looking at the way you have got a good response, quote unquote, on the preliminary bid so far.
I don't think so, because I think a lot of work has already been done on the health of the IDBI Bank over a period of time. Not only in terms of capitalization, which was done, but also the net NPA is what counts, and that has been very, very.
So you don't think that overhang is going to be there? Okay. So also, you have been now post divestment, your share in IDBI will be counted as public shareholding. SEBI has given clarity on that front. There are certain terms and conditions attached to that. So would the GOI be meeting all of those? You will not have a seat on the board. You will not have, voting rights have so far been defined by SEBI. So are you going to meet all those 3-4 terms and conditions?
If you have read it correctly, that was initially our proposal. That was basically our proposal, because it is the government, when it's mindful that if it is wanting it to be, sort of designated as public, that doesn't mean, you can't be a promoter and the public at the same time. So it's clearly we are getting off the promotership, and that was our proposal, which the SEBI has agreed.
Okay. So what about LIC? We're given to understand that LIC probably also has made a pitch in terms of treating their shareholding as public. We don't really know what has been the response so far. So is it on board? Is it not on board? Has SEBI rejected or accepted? And either ways, how does that really look?
I think that's not really a very important issue, because LIC, maybe LIC in future would be public when it brings down the shareholding to a certain level, which SEBI wants it to. So it's for the government that we wanted to be very clear about, because there I think whether to be director, whether to have director or not to have a director. Now, LIC is at the end of the day is there in different companies. Of course, when it is there in different companies as an investor, it has to bring it down to a certain level, and if it is exceeding a level, maybe at that level it might not be granted a public status, but in future, yes, when they bring because both LIC and government do not intend to stay on there. It's only an interim arrangements that we are there as a financial investor. Both in terms of the size of the transaction that it would mean, also because of the upside that we might like to take it in post disinvestment.
Okay.
So in both cases, I think both LIC and government, they would like eventually to exit in a time frame which will be defined in future.
Okay, but basically as of now, has the regulator given clarity on LIC's pitch, sir? Anything you will share with us?
No, that's not the concern. I think the government was wanting to push its own thing, and therefore their proposal has been agreed to.
Okay. So LIC's pitch probably was not a material concern. What was material was the government's pitch. Got that. Also, sir, you have also amended the SERA rules in terms of the minimum public shareholding norms. SEBI's not so far says IDBI Bank post divestment will have to meet the MPS norms within 1 year. But at the same time, government has amended the rules on the other hand. So how do you see both of them panning out? And will you be giving a clarity on, extension or exemption from MPS, any kind of a deadline that you're looking at? So far, the timeline has not been expressed. And will that overrule what SEBI has brought out, that 1 year timeline to meet MPS for IDBI Bank?
See, the SCRR rule is a generic thing. It doesn't really, it's not really only for the IDBI Bank. It's in general for the government, you know, a certain category where the government has substantial holding or the public sector companies have the substantial holdings. There, you know, it is basically sometimes meeting
for other banks and
meeting public
PSBs and CPSEs which are not.
Yes, I mean, sometimes it becomes difficult for them to achieve MPS in a time frame in which is required. Also because, you know, as a government undertakings and all that, some may not be doing well, and if in order to do that, they may not be takers, for example, for some. In some cases, for example, bank, a reverse thing has happened where government had to recapitalize. So even something like IDBI Bank, which was an MPS earlier, it had to slip into a non-MPS category. So there are different things which emerge, and I think in order to meet that eventuality, and that is not really a general blanket thing, it's only a power to exempt case by case, and also for a particular period.
Right. So what is that going to be?
So only the notification has the new rules have made it clear that number one, I mean, it's clarified the language which was already there since 2021. Secondly, I think an explanation has also been added that you know, it will not really disrupt this strategic disinvestment process in certain cases. For example, if you have given this one fine morning, you know, if it gets out and doesn't fit into that public sector definition, then it can't lose the thing, and it has to have a transition period which was granted earlier in the first place. So because that is granted to a company, to an entity, and it is not to, you know, whether the ownership now based on, you know, ownership change, all of a sudden overnight, if you do that, that will be unfair.
Okay.
And I think that is a eventuality which has been onboarded. And SCRR rules, in fact, takes away, it's a generic rules, and within that, a specific notification that needs to be issued.
So what is the kind of deadline that you're thinking of in terms of extension of the of meeting the MPS norms?
No, I mean, that will be there. As on date, in fact, IDBI Bank enjoys that exemption.
Till 2024.
So, I mean, it will be really clarified in due course as to which is the period in which MPS must be met.
Okay. Also, sir, you know, as per the PIM, basically what it means is that IDBI Bank, along with the associates and subsidiaries, is being offered. Is that what the government has proposed?
Pardon?
IDBI Bank, along with the subsidiaries and associates, is being divested. Is that what you have proposed, or it's going to be a separate exercise?
No, I think at this moment, that's the one.
Okay, okay. Together, subsidiaries and associates
Together.
Along with the main bank. Okay, sir. Sir, also just want to understand on a philosophical level, you know, what would be the government's preference? Would it be more in terms of PE investors, you know, who may look upon the entire deal transaction as more of a financial investment or financial returns rather than a strategic player like banks? You know, what would be the preference of the government? On a very philosophical level, I want to ask this.
There is no philosophy into it, and there is no preference into it. Once we have defined our rules of the game, once we have given that, everyone is in equal footing, and whosoever will bid the highest will get it. So there is, in any competitive bidding process, is no question of a choice here. When we have said that these are the equals, within the equals, whosoever actually bids the highest gets it.
Okay, and so in case it's a PE that is interested, I'm just asking hypothetically over here. So do they have to come in the form of a consortia? Because you will need somebody to drive the bank, right? Could you explain something on that front to us?
No, that has not been our structure.
Okay.
Even any PE can also come in singly, which
Okay.
was.
Okay.
So the consortium was, you know, was not a mandatory requirement.
Okay. Fine.
One
Fine.
could come as a consortium, but not as a mandatory requirement.
Okay. Okay. And in case it's a bank, then of course, you know, they will have their own license at the moment. IDBI has a deemed license. So how does that work, sir?
No, the licensing has been made very clear that, you know, if it were a bank which were to bid, then the license, there will be only one license post as investment. So there has to be a merger.
Okay. Okay, sir. Right, sir. Right. So also in terms of, the way the markets have been, one question that is probably asked frequently is the fact that when, private promoters have done so well in terms of divesting their own stakes, big numbers are being given out. Could the government have been more proactive on its disinvestment agenda, sir? What would be your assessment and your response?
The government has been always telling that we will go for a calibrated way of disinvestment, keeping in mind the the minority shareholders' interests, which are also there. So, and in case of privatization, of course, where the management control is passed, it has to be again, in a calibrated way when a transaction is announced, and then we try to take it to a logical, conclusion through the bidding process.
Okay, calibrated is the watchword there. Also, sir, in terms of your residual stake in Suti, would you be selling out from ITC? If yes, what is the rough plan on that front? If not, sir, why not?
No, I think Suti, there is a administrators. Then there are they look into it, and from time to time they take decisions. So I am not really responding that when and what, and again, as much as we would not really like to reveal when and what, and we will like to come to an OFS or try to disinvest.
Or a block
well,
deal.
I think we have to meet with the SEBI norms and act accordingly.
Okay. So would you be in principle closed towards selling further stake in ITC, or in principle not? Not really. Open-ended but not decided.
No, I would not like to comment on these specific things.
Okay, okay. So also in terms of the big strategic disinvestments now, how do you see the coming financial year? Do we understand that of course IDBI would be the big one, along with probably Shipping Corporation, Concord. Give us an idea, give us an assessment of how you're looking at the new financial year.
We are all looking for the ongoing transactions, which are at different stages. They should be concluded as per the process, and I think that is what we would like to do.
Okay, but any particular ones, particularly that you are very hopeful of?
No, I mean, I think I am hopeful of all of them.
Correct, correct. So no order of preference in that.
No, there is no question of a preference. It's a cabinet mandate, and certain things are announced, and I think we must carry them forward and conclude them.
Right. So specifically speaking on SCI and BML, could you just share with us what is the current status, and are you still very hopeful of BML going forward? Because again, some people have been saying, some quarters are saying that maybe not very sure whether the bidders are still in the race or not. Could you give your assessment?
No, our transaction advisors inform us that we are all, moving forward, and of course, I think in BML case, even the demerger process has also been done, and only now listing remains. And the same thing is about NMDC Steel, where demerger has been done, a listing remains, and in SCI, the demerger order is awaited.
Okay.
So these are the kind of things which require demerger because of hiving of non-core assets, which was a requirement, and I think it took really time around it. But we will definitely move forward post that. Okay.
So you can expect, you may be calling for the financial bids by March end sometime, or maybe slip into the financial.
Well, I would say that it will depend upon when they're ready, and transaction advisor advises, and the listing happens. Yes.
So there's also talk about MMTC, the fact that the government is very close to finalizing the closure of MMTC. Could you please give us an idea about where we stand on that front? And there are a couple of companies the government has been looking at a period of time in terms of closure. So anything that you would like to share, sir?
No, there is nothing as far as MMTC is concerned yet.
Okay. But there have been reports saying that...
there could be reports, but reports are there all the time. But not to my knowledge. Okay.
So also another, talking point has been government's plan to sell off stake in fertilizer companies, being the non-strategic sector. So could you share something with us on that front? I mean, there was a lot of buzz around 6 odd months back, but then we're not hearing much on that front. Now and then the issue keeps cropping up. So anything that you'd like to share, sir? Is it still on, not on?
Again, I'm not really aware, whether any such thing is there. I think media keeps speculating. You have right to speculate, because once you have new PSC policy, you will keep on speculating. But there is no such thing yet.
Okay, sir. And sir, one of the last questions, how do you look at your pipeline for FY24, both in terms of OFSs and statistics are full, your bag is going to be full on that front. But how do you see the coming financial year going forward? And I know, the government is very clear that divestment aim is one thing, but actually doing the work on the ground is another thing. But how do you look at the whole thing? What about your numbers? Is there pressure to meet them, and would you like the targets to be modest, moderate, or realistic? Anything that you can share with us?
I can only say that Honorable Finance Minister will announce the budget, and we will carry forward, and we have been, whatever ongoing transactions, we move forward on that.
Okay. Okay, fine. Nothing in terms of the numbers should be realistic or modest or moderate or nothing of that kind. Right, sir. Thank you very much for giving time to CNBC-TV18. We'll keep coming back to you for more inputs. Thank you very much.
So that was some important commentary coming in from the Secretary Tuhin Kanta Pandey, though he maintained his silence on the ITC stake sale by Suti, but a lot of comments coming in on a lot of other PSUs as well. But let's move on and talk about another important development that took place. There has been some relief for Chanda and Deepak Kochar as the Bombay High Court has directed their release, saying that their arrest was not in accordance with the law. Santhya joins in to tell us more about that. Santhya.
Yes, this is a relief for the Kochar couple, which was arrested on 23rd of December. CBI, the agency which is investigating ICICI Videocon bank loan fraud, that's the agency which made the arrest. Now, talking about what Bombay High Court has directed, Bombay High Court has directed the interim release of both Chanda Kochar and Deepak Kochar on a cash bail of ₹1 lakh each. So when the Kochar couple was arrested, within a couple of days, their Kochar couples, they moved an application in Bombay High Court. They challenged their arrest and they claimed that the arrest was not in accordance with law. CBI, the arresting agency, the investigating agency, did not follow the protocols and violated the norms under section 41A of CRPC. So this is what the section says, that if an accused is making all the appearances before the investigating agency, cooperating with the investigating agency and providing the required information, in that case the person should not be arrested. So defense counsels argued in the court that both Chanda Kochar and Deepak Kochar, whenever they were called by CBI, they were in touch with the agency. If they wanted a later on date, they contacted the officer and they abided by whatever the agency demanded them to do. They appeared before the agency, and not just that, Chanda Kochar actually carried notes with her in anticipation of what the investigating agency might need to know from her. Apart from that, defense counsels also argued that both Deepak Kochar and Chanda Kochar, they carried documents with them so that they could explain their side as well. CBI argued that yes, the couple was appearing before the agency, but they were evasive. They were not giving correct answers. So Bombay High Court, in a relief to both Deepak Kochar and Chanda Kochar, has granted them interim release on a cash bail of ₹1 lakh each.
All right, Santhya, thanks a lot for that. So that's another development that's taking place. But through all of this, the market stayed resilient. In fact, we're at the high point of trade. What we'll do is take a short break, come back, and trading hour will take all the market action ahead.